we're sitting here in April 2019. We took somewhat of a hit in the last quarter of 2018, especially through the quarter, and we were off kind of 10-15%. We've recovered all of that actually and more. Part of the way we recovered is because we didn't really think that the Fed in the US was going to significantly lift rates, and we took the view that our companies would do better. And indeed, the Fed then recanted on the whole business of the lifting of the rates, so that definitely worked for us. But even absent that, the gearing ratio, the net debt to equity ratio of the companies in our portfolio as a group is a negative number. That means they don't have debt as a group, they have net cash as a group. They are amongst the most financially secure companies in the world because they are fundamentally not net borrowers. Some of them may have debt, but the cash they have exceeds the debt, so therefore their net debt position is a negative, meaning that they have net cash. That's the way that works. So our companies are in the happy position because they generate so much cash flow of not having had to go back to the market since initial listing. Google never went back, Amazon never went back. And on top of that, they have been accruing significant cash flow, so they are in very, very strong financial positions. And as a consequence of that, even I think, and you can't say this because frankly it didn't happen, it's a counterfactual, but even if we didn't have a better set of numbers to deal with at the macro level in the first quarter of 2019, I suspect our companies would have done better because they are less prone to exogenous shocks as a result of higher interest rates because they have net cash. So we believe that these companies work for a whole series of reasons: better business model, most up-to-date tools, and better financial ratios. I'm a big cap analyst, Macquarie Bank for 20 odd years. We spend our lives on balance sheet cash flows and P&Ls. We think about this stuff a lot, and we certainly think about it a lot here because it's the core of what we do.